Hi, welcome. Mitch Argon here with CalNeva Realty. I'm going to take you through the Greater Reno Tahoe real estate market information for February 2023. Let's get started. Okay, first off, we're going to start with the median price. As you can see, January 2023 closed sales compared to January 2022 closed sales 1 year ago. We're starting to see some markets showing negative price growth or price depreciation. Namely, if you look at Reno and Sparks, you see negative 11%, negative 5%. So as the markets have been slowing down and coming and decreasing in price, they were showing positive, but now as we're getting a little further along, they're showing negatives. And I'll show a couple charts that show you a little bit more about what's really happening there. That's a little closer to being more accurate. This Tahoe number down, these numbers here are going to fall in and be fairly accurate, although you're going to see some more information in a moment. But this Tahoe number here at minus 26%, the sample size is very small in the Tahoe market that we're sampling, which is the south shore of the Nevada side of the lake. I mean, we've been having like the last 3 months, 1, 2, and 3 sales in those markets. So the median price is a very small sample size. It's not going to be very accurate. This number could be a little bit misleading. Just want to make sure that you're tuned into that. What are we looking at on a month-by-month basis? This is a visual view of that. You can see some of these markets are up and down by month to month. So, things are trending a certain way, but it changes quite a bit from month to month. You can see here the Carson Valley at the top of this really zigzagging quite a bit from month to month and showing actually a strong increase just last month in January, but you can see generally trending on the downward slope. So anyway, the numbers are here. You can take a look at this in this chart. If you like, you can pause the video. I thought I'd keep a little more visibility on this peak to trough summary chart because I think many people are looking at the markets and looking to see how much of a correction we've encountered so far with this price correction that we're going to this period we're in right now, which really started about the third quarter of last year. So you want to focus over here on this far right side. This shows the most recent low prices and the date that it occurred. You can see that we had 3 markets, Reno, Sparks, and Dayton, each hit a low in January of 2023, just last month. These other markets did not. They were a little bit higher from where they were. But the key thing is this number over here. This is the number that's not on a year-over-year basis. This is a number that is compared to the most recent peak. So our most recent peak was very recent. It was just largely about second quarter or midpoint of last year. You can see these are all 2022, May, June, July. Here's an April here for Tahoe. That's when the markets were peaking out. This shows you how far the markets have adjusted since that time. A couple that are a little bit unusual, I'll just point out. One is this 29% for Carson Valley. This 730 was kind of an anomaly that was a little bit high. So that number being the high water mark makes this look like a bigger price decrease. But that was only 1 month that was that high. This is probably in the teens with the rest of these other markets. And the Tahoe market at a minus 58% is, again, based on these median price numbers being very volatile because the sample size is so small in Tahoe and the price range is so large. So I think what I'd probably say is on aggregate, we're probably looking at a market correction here that you can see a low of 12% here for Carson City and probably up into the high teens here. You can see 17% for Reno, 19% for Dayton. So if you look at this in the context of what happened during the pandemic with the rapid price increases, we had probably rolled back the clock about a year because the markets were going up at about 20% per year. So we rolled back about a year of that appreciation that we saw between 2020 and the middle of 2022. That's a key number to watch going forward. Another key number to watch going forward, which I introduced last month, and I thought I would keep some visibility on, is the general affordability. Now, this is simply one snapshot of affordability. It's the same chart I showed last month. It's the Reno median price. It's the Reno market, which is a large sample size for our region here. Median price last month in Reno is $528. If you have a quality buyer who's putting 20% down and financing 80% and getting a 30-year conventional loan, their payment would be $2,620. Now that's down a little bit from the prior month, and it's down from the peak up here at almost $3,000. And the reason I want to share this with you over the course of a number of months or quarters, or maybe do this every other month, I don't know, is as the price gets higher, people leave the market, a natural byproduct of lack of affordability. As the price of a monthly mortgage payment gets lower by either a combination of lower prices or lower interest rates, or both, then this number is going to get lower. This line chart going through will get lower. When this number gets down to the point that it's close to what you're paying for rent, then you're going to see more people re-entering the housing market, because it's like, why pay rent when I can pay the same amount for my mortgage? So I think that as this number here gets lower, and it probably will over time, based on what I just mentioned, and as it approaches about $2,000 a month, again, this is for a medium priced home in Reno, we're going to see the markets become much more active, because people will realize it's better to buy than to rent. When that happens, time will tell. But I want to share this perspective with you, because I think if you're looking at the markets and trying to determine when they may become much more active, and we may start to see prices start to plateau, it probably will occur on or around when this affordability comes back into line for many people. So we talked on pricing, some price trends. That's what people are usually most interested in, I think. The homes sold is another big part of the equation. And you can see here that in January, the number of homes that were sold compared to January of 2022 was substantially off. We're down 41%, 60%, 52, 61, 62, and 67%. So we're way down in sales volume. Again, these were closed in January, so this was December activity during the holiday period. So we actually had a slowdown during the holidays, which we hadn't seen for the prior couple of years during the pandemic. We are seeing January pending sales this year was a little bit sluggish, although we have been seeing quite a big increase in activity with our own listings in our company, and with buyers that we're servicing within our company. And I do think that probably when we get out into March and we're looking at March sold, so we're about 2 months away, these numbers are going to become quite a bit smaller than this big decrease that we see here, simply because we are seeing things happening with much more activity. Month supply of inventory I'll touch on. It's still low, as you can see through here. Firmly's up to 3.2. Tahoe is at 4.8. It's still below the 4 to 6 months for a neutral market, although it's changed dramatically as you've seen. So it's fairly stable though. Even though prices are coming down and this volume is down, inventory remains low, and I'll share that with you in a moment. And what that's doing is that's keeping this month supply of inventory on the lower side, and that's one thing that's making these price drops. While we're going through a correction, we're not seeing a crash. It really is a correction. This chart simply shows you a current view of the homes on the market by the local markets here. And if you pause the video and you were to look at this, you would see that this is trending very much like prior years. You can look back a year ago or 2 years ago, but we're at a more elevated level. Even with this elevated level, we still see inventory constraints. Buyers don't have all the choices they probably would like to have in the current market. And that is one of the things that's keeping pricing from dropping further than it has already. Again, a quick snapshot of the month supply of inventory. This just shows you the chart that had the table shows you this column over here, which is the current numbers compared to where we were a year ago. So they're up quite a bit, as you can see on the chart. But I think you also want to look at this and recognize that it's a fairly stable progression. We're not seeing these numbers go through the roof, going up way up into this territory in here. And that's what you see in a market crash when they get really high like this. Back during the Great Recession, when we had a wave of foreclosures and short sales, we had month supply of inventory in literally all of these markets. That was probably in the 14 to 7 months supply of inventory. Right now, we're still very low down here, and that's just a function of what's really happening in today's real estate markets. Okay, that is it for this session. I hope this has been useful for you. If you have any questions, please leave them down below in the comments here on YouTube. If you want to see the full market report, which has these charts and other charts in more detail by each local market, click the link below, and that will take you to the Greater Reno Tahoe Real Estate Report. which has basically all the data that I'm sharing with you here in the video. This is just a summary. Thank you for watching. Until next month, have a great day. Thank you.